We've been talking a lot about technical trading, buying things when they go down, things like that, right? When things are on sale. A lot of things when they go on sale, you don't want to touch, okay? Because they have a tendency of doing this to you, whatever you see on the picture here. That was a question actually I remember from Friday. Somebody said, do you buy things when they're going down? I go, no. I rather buy high and sell higher than buy low and sell high, right? I mean, it's very counterintuitive, but then, you just kind of have to figure that out. You have to do this to yourself a few times. Now, this could happen on the upside as well, uh, which we're going to talk about GameStop towards the end. Um, this is not a good thing, right? Okay, so do not fall a catching knife. Well, what did I say? Do not fall a catching knife. See, I'm so like thinking about what's happening in the market in the background. Do not catch a falling knife. Sorry. If you do catch a falling knife, the likelihood of this happening is extremely high. And I will show you guys some charts that this happened last week, a couple of weeks ago. And what a mess it creates for you, right? I mean, it hurts. Literally, we're not obviously catching a falling knife, put a hole in our head, but in our, hand or arm or head or whatever, it's going to hurt your account. I mean, and coming back from one of these is very, very difficult. Okay. So don't do this. Okay. Just let things settle down. You don't need to be a stock jockey. I have a lot to say about day trading and stock jockeys coming up. I'll probably do that on Friday or do a separate video on that. It's going to be a funny video. But we'll keep that aside. Okay. So here's an example of a falling knife. Okay. This stock came public not too long ago, maybe a couple of weeks ago, 3 weeks ago. By the way, each bar is a single day. Okay. Stock, sure enough, went from $4 all the way up to $25. Nobody knows why. Supply and demand, more buyers than sellers. So if you made money on the way up, great, right? Okay. And I don't even know what this company does, honest to God. But do you guys see all the way to the right? Kind of to the right, maybe a third of 3/4 of the way to the right, there is a huge red bar going down. In a single day, one single day, stock went from 24 to 4. Now, that's a falling knife. Now, at 24 to 20, down 20%, you would have said, yeah, it's pretty cool. I'll buy it. Okay, then it goes to 16. Then you go, wow, now it's really on sale. I'll buy some more. Then it goes to 12. Then you go, oh, I'll buy some more. And there you go. You're going to the poorhouse. Exactly in one single day. And single trading hours, by the way, is 6:30 a.m. to 1 p.m. So we're talking in 6 hours. You're about to lose your bank. Okay. And sure enough, now it has settled right about 2.5. Even if it had gone from 24 to 4, and you would have said, wow, what a bargain. Down 80%. Yeah, now it's 2.5. Down another 50% almost. Okay. So this is a perfect example of not to catch a falling knife. This is what's going to happen. It'll stab you, it'll slice and dice you, and then you'll be poor. Have I done this? Yeah, a couple times. And it hurts, man. It hurts. But that goes to show risk management, right? Okay, let's say you bought this at 20, it dropped from 24 to 16. You bought it. Well, where do you pull the plug? 14, 13, 12? Yeah, you have to do that. You have to pull the plug, take the loss. If you take the loss on this, and if you really mess with it, which you shouldn't have, but if you did, now you're looking at 2.5, right? So you got to cut your losses short. You got to let your winners run. That's the trade with the trend. Remember, guys? Okay. Here's another one. This is actually a pretty big company. This is on the New York Stock Exchange. It's called Global Life. Okay. It's a life insurance company. Okay. So stock is like meandering around, I don't know, $140 or so, right? And then it starts kind of curling over, as you guys can see, towards the right-hand side of the screen, right? And then there's a company out there that basically shorts things first and announces it later. Shorting, we're going to talk about on Friday because it's an important topic, because my bias is negative. You guys need to know how to make money on the way down. What happens to the stock? They announce that they're short and they think this is a fraud company. And what they do to the stock, they take it in the back and shoot it with a 50 caliber. Okay, this is a New York Stock Exchange company. This is not a joke company. All right, it's a couple of $1 billion market cap company. What does the stock do? You guys see the falling knife there? That big old red bar, right? Okay, in one single day, stock goes from I don't know, 100 or 120 to 40. Okay, this happens, people. This is fall. Catch a falling knife is like this right here. Now, you guys are going to say about Surge. Look at this. It bounced now all the way from 40 to 80. But that's not the point. It could happen what happened to the last one that I showed you guys. This one. That goes from 24 to 4, and now it's 2.5. And 9 out of 10, this happens when a knife falls. It usually doesn't bounce. It may have a dead cat bounce. I think this one is having a dead cat bounce. They call it a dead cat bounce in our world. And yeah, it went from 40 to 80. I will be shorting the crap out of the stock as soon as it starts rolling over, because there's no doubt this thing is going to go right back to where it was, where it belongs. But what I'm trying to say to you is that don't catch a falling knife. That stock going from 120 to 40 in one day will do nothing but harm to you mentally, financially, every which way. Specifically, your bank account will go to zero, especially if you're leveraged, especially if you're trading options. Or you can go with it, right? I made actually money on the stock on the way down. My point is, again, my mentors, I never forget what they told me 20, 30 years ago. Do not catch a falling knife. And this is another perfect example of catching a falling knife.